Get ready, guys. Warren Buffett, the Berkshire Hathaway partner of Charlie Munger, rest in peace, the greatest of all time investor. He just bought 3 stocks, and I'll tell you the tickers right away. They're in healthcare, satellite radio, and good old oil. United Health, yes, that United Health, UNH, Sirius XM, the Sirius XM you know and maybe love, maybe don't. That's Siri, and Occidental, OXY. That's the oil company. We'll break down why Berkshire bought each of them, the latest news on each of them, and the fresh earnings you need to understand in order to get in them safely. As always, do your own research. I'm not a financial advisor, and let's make some smart financial decisions while it's not the end of the top of the market, but it's getting to be very extended from April. That's all I'm saying. Now, let's jump in to United Healthcare first. So Warren Buffett, he's not just guessing, right? He's 85 years old. He's waiting for, the quote is, when there's blood in the streets, that's when he pounces, right? When everyone's running for the door. And this is exactly what happened with United Health. Everyone ran for the door here. It went from 600 to 250. And people were buying all along here, all along here. You can see I actually tried to buy it at one point with a very tight risk. And he just scooped it up here, and the price move has been pretty spectacular, almost 20% in the last couple days. So he bought 5 million shares, about $1.5 billion as of June 30th. Now, if we look back, this was a while ago, okay? So the news is just coming out now, and we're seeing that jump in the stock price as a result. But keep in mind, June 30th, he could have bought up here, he could have bought here, he could have bought right here. So if you are going to buy when it's lower, you could make the argument that you're getting a better price than Buffett did. Or you could make the argument that now that you have new information, you have earnings, you have a lower stock price, so you have to decide, is it worth buying given the new information? So let me give you that information. The revenue was 110 billion in Q2. You see the earnings right here. The earnings reaction was muted. The stock went down initially. The revenue was up 10% year over year. Adjusted earnings per share was at $4. And the GAAP earnings per share was 14.5. So look, there were a couple of important points on the calls. So management said there are higher medical cost trends, but they expect to return to earnings growth in 2026. We don't expect these type of earnings reactions to continue, is basically what management is saying. They think United Healthcare has the widest moat in the U.S. managed care publicly traded pool of public companies. And with the scale and cash deploying machine that Berkshire Hathaway is, it's clear that they took a very measured bet on United Healthcare. So is there room to run up to this 200-day moving average of $400 before it made this terrible move after this terrible move? There could be. Am I going to buy it? I don't know. Do you care? You have to do your own research based on how you invest. I'm just telling you, Buffett is in the stock as of June 30th, and a lot of funds, retail, the world is buying the stock right now. And you can see the volume is up above these levels after earnings, which is significant to have more volumes than the earnings volume. And about half of this serious, what we thought was at the time capitulation selling, and probably what Buffett thought was capitulation selling, which is where he may have bought in here around this $300 level. So that's the first Buffett buy. The second Buffett buy is Siri. After Q2, Berkshire owns about 125 million shares of this company. That's roughly 40% almost. That's a huge stake. And the likely reason is they have a monopoly and oligopoly in satellite radio. Sirius XM is satellite radio, big free cash flow, management team that's cutting costs. And as much as you or I might use Spotify or not touch a radio dial ever, middle America uses Sirius XM if they've even upgraded yet. This market is huge, and the stock actually looks, if we just load it here, very, very beaten down. I think that's basically a trend for Berkshire's buys. That's a trend if you are a long-term investor, to look for not stocks that are breaking out, not stocks that are pulling back to moving averages like a swing trader tends to look for, but more so stocks that are relatively under the radar. So am I going to buy Siri? I don't know. It's not a typical swing trading stock. We can see it has been going down, and when it has spiked up, it was sold off initially. So is there an opportunity here? There could be. Do I see it specifically? I don't know. This earnings is the most recent information we have. $2 billion, net income of $200 million, 57-cent earnings per share, adjusted EBITDA of almost $700 million, $400 million of free cash flow. These are big numbers in isolation. They don't mean anything, but it's just reaffirming that this is a profitable company. They also reaffirmed guidance, full year revenue, EBITDA, and free cash flow. So they're not changing their tone as of this most recent earnings event. There is pressure on subscribers and ad spend, but free cash flow is there. So as long as small businesses as well as franchises continue advertising on Sirius and don't move all of their ad spend to digital, where there's more bots, not just on X, but on platforms like Meta and Google, big advertisers are still worried about impressions that are not real. And on the radio, they can hear them. There's no clicking. So it sounds stupid to say it that way, but that's the argument for advertising on satellite radio. Berkshire cares about this type of information. Berkshire cares about buying a stock when it's on sale. And if we look at June 30th, they most likely got in at a price relatively similar to where it's at right now, depending on when this report applies to their buys. So that's Siri. The third buy is, in my opinion, a little bit more speculative. This is OXY, Occidental. And this seems to be the chart that's loading for me right now. So I'm going to focus here and hope Schwab and Thinkorswim gets their act together. They don't always perform well on the weekends when they do their upgrades. It's Friday as I record this. Berkshire's been a big shareholder here for years, and their thesis hasn't changed. Permian scale, capital discipline, and carbon capture. So what does that mean? Well, we don't even necessarily have to worry about it. We don't have to be oil experts. What we do know is that technically there was a lot of capitulation volume here. It's exceeded that level, which means people who sold here were met by buyers, and these new buyers are not selling. So when people are not selling, that's good for us as new buyers as well. Conversely, if this volume over here, say, were higher than this volume, and we can use this chart as an example, If the price gets all the way up to 60s, now we're contending with a new range of buyers who are underwater who may sell. That is the main strategy short sellers use, to sell short into legions of buyers, high volume at a certain price resistance level. And that's the strategy we want to be familiar with, even if we don't use it ourselves, as mid to medium term to even long-term investors. Berkshire would have bought sometime around here before June 30th, and the price has really not moved much since that time. And in terms of technical means to get into this stock, if we look deeply here and try to get a read on how to enter this safely, you can see the after-hour sessions in the gray, and you can see that the wicks are relatively minimal. The stock moves 1% a day. You're not going to have to worry about getting in this. Do I think it's the best use of your money? I don't. Did Berkshire buy it? They did. For that reason, is it safe? Yes. Does safe mean growth for you and your portfolio? No. So that's all I really have to say about Oxy. It doesn't really look super appealing to me otherwise, outside of that news about Warren Buffett buying it. It's just a slow mover, and the earnings are solid, but just because they have great net income, 300 million almost, adjusted income of 400, oil and pre-tax at almost 900 million, and in management slightly lowering guidance, but highlighting ongoing cost cutting. It seems like all you really have to know, management says whatever they think analysts want to hear, and they have to report accurate cash flow, and they did. So it's safe. You can see the earnings reaction mirrors that fact. So look, United Health, everyone's talking about. This move on the Buffett buy, as we see the gap up when I use the one-day chart rather than the 24-hour chart, is huge. They have scale. They have basically a lot of bad press, right, around United Healthcare. We all saw the news story in the past year or two. Do you want to buy it? That's up to you. Did Warren Buffett buy it? He did. When did he buy it? Somewhere in here. Siri. They basically have built-in distribution as they get rolled out to more and more new vehicles, new cars. And that means that the market is growing despite satellite radio not seeming like it's going to be the future. They have a ton of subscribers who keep enrolling because they keep driving the same car. You don't upgrade your car that often. Big free cash flow. And again, Buffett bought them. Finally, Oxy, probably the safest, but also the less interesting stock. It's basically, a stock that did lower capital expenditure, and they still had high free cash flow. And again, they can't fake that number of free cash flow. So is it safe? Yes. Does it move slowly? Yes. Is there an opportunity to get in that I think is worthwhile for a mid to medium term trader, investor? Not really. Now, I want you to take this information, do your own research, and if you want to check the filings on Edgar, they are publicly available. I don't always think that's the best move, given we look at the news and then the news affects the price, and the price and the volume, like was talked about in this video, is the most useful as long as you're trading with less than $100 million, which I am hazard to guess 99.9% of people watching this are. Then you don't need to look at the Edgar filings as much as serious analysts say you ought to. Now, with all that said, if you like this video, if you like this analysis, if you like this sort of honest approach, giving you some news, some technicals, and some stocks to look at, hit the subscribe button. It helps show other viewers that this information is legitimate. And if you want to talk for 15 minutes on a call with me about your portfolio, go to selfadvisors.com. We do have another opportunity if you're more interested in day trading. I am more interested in long-term investing. So I have partnered with a day trader who has made $9 million. That's verified. And I'll actually log into his broker right now so you can see that if you want to take him up on the free training that he offers at aikidotradingmethod.com. Here it is. Thanks for checking out this free training. I'm here with the lead sensei of the Aikido Trading Method, Adam Geffert. I'm just going to log into his broker very quickly so you can see that his results are real. This is his Guardian broker. He does have more brokers than this, but you can see that he's made about $4 million net.
Yeah, Guardian's been a good broker for me. And in this quick video, I'm gonna show the viewer how to trade. Show them a little taste of the Aikido trading method, method that I've. So let's start with the times to trade. The best times I think to trade are on the pre-market and after hours. The stocks move differently than market hours because there's less traders at that time, and also you can do it in those hours, and it won't disrupt a day job or it won't disrupt things that you might want to do during the day. And let's take a look at some of the trades I actually did today here. I'll share my screen. So these are some of my brokers here. They're all brokers that where you can short microcap stocks below 50 million market cap, nano cap and microcap. And here's a trade I did today. This is KTTA. So I made about close to $30,000 on this broker with this one. And I started out in the pre-market after the news hit at around 7 a.m. I shorted it, then I covered.
And if someone's interested in learning more, how can they reach out?
They can go to aikidotradingmethod.com and click on the free training, and there's some links on there where you can go and then you enter your name and email address, and that actually goes to this video right here. But what we'll do is we'll email you and tell you the next steps to learn more about the Aikido trading method.